Okay, so hello my dear students. Welcome to our discussion for foreign currency transactions or accounting for foreign currency transactions. So in a strict sense, foreign currency transactions are transactions that are to be settled in a foreign currency. No? So regardless of the location of either party. So foreign currency transactions are economic activities, no, denominated in a currency, no, so other than our recording currency. Okay, so example, purchases or sale of goods or services, imports or exports, and of course, the prices of which or are denominated or stated in a foreign currency. Okay? Or pwede rin loan payable or receivable, no, or debt transactions in a foreign currency. Okay? So, how do we determine, no, if it's a foreign currency transaction? Okay, so if it's a transaction between a Philippine firm or a domestic corporation, and another domestic corporation, but it is to be settled in our domestic currency, which is actually the peso. So it is not a foreign currency transactions, no. So kasi nga hindi siya exposed to changes in exchange rate or risk, so there will be no gain or loss. Also, if it's a transaction between a domestic corporation and another foreign corporation, pero ang settlement is in peso or domestic currency, no? It is not a foreign currency, no? In the perspective of the Philippine firm, no, the domestic corporation, kasi nga it is to be settled in our currency, the Philippine peso. No? So, walang gain or loss. Okay, so, on the perspective naman of the foreign corporation, no, the foreign corporation, so it is a foreign currency transaction. It's because it is to be settled not in their currency, but in our currency, no, the Philippine peso. So, in this case, the foreign corporation would account for the gain or loss, no, arising from the changes of the currency. Exchange rate. Okay? So, if it's a transaction between a domestic corporation and another and a foreign corporation, but it is to be settled in a foreign currency, their currency, okay? So, it is a foreign currency transaction on the Philippine firm, for the Philippine firm's perspective, for a domestic corporation, okay? But in the perspective of that foreign corporation, it is not a foreign currency transaction. Okay, so they will not account for the gain or loss for the changes in the exchange rates. Okay, kasi nga it is to be settled in their currency. Okay, so if it's a if it's a transaction between both foreign corporations, no, and then to be settled in their currency. Okay, so it is not a foreign currency transaction for both foreign corporation. Okay? So these transactions are accounted for by the domestic company by translating the amounts in foreign currency with the BSP set exchange rates. So for translation purposes or for conversion purposes, the exchange rates must be quoted directly kasi we do have direct exchange rate and indirect exchange rate, no? So where the peso is expressed as the equivalent of one foreign currency. So let's have a direct exchange rate. So the direct exchange rate, or DER, is the number of local currency units needed to acquire one foreign currency unit, or FCU. Okay? So from the viewpoint of the Philippine entity, no, it is this the exchange rate can be viewed as the peso cost of one foreign currency unit. Meaning to say, how much peso we need to acquire, no, or purchase a foreign currency, one foreign currency. So the direct exchange rate ratio is expressed as no Philippine peso equivalent value over one foreign currency unit. Okay, so example. So let's say for example, one foreign currency na is equal to 25 pesos, meaning it costs us 25 pesos to acquire one foreign currency. Okay, then what if we do have 20,000 foreign currency? How do we translate that or convert that into peso? Okay, so if ang given is a direct exchange rate, like this, for example, that is an example of a direct exchange rate, so to convert or translate that into peso, you simply multiply the number of foreign currency with the direct exchange rate. So we do have 20,000 foreign currency times 25 na direct exchange rate. So we do have 500,000 pesos. Okay? So, yung indirect exchange rate naman, the indirect exchange rate is the reciprocal of the direct exchange rate. Okay, so from the viewpoint of the Philippine entity, the indirect exchange rate can be viewed as the number of foreign currency units that a 1 peso can acquire, di ba? So it's actually the kabaliktaran, no? It's actually kabaliktaran of the direct exchange rate. Kasi yung direct exchange rate, how much peso, no? How much Philippine peso na ma-incur natin, no? If we purchase one foreign currency. So, how much peso cost would be needed to acquire one foreign currency. Yun yung direct exchange rate. So, yung indirect naman, di ba? The number of foreign currency units that one Philippine peso can acquire. Okay? So, the ratio to compute the indirect exchange rate is one foreign currency over PH peso equivalent value. So, yung example kanina na yung direct exchange rate na one foreign currency is equal to 25 pesos. Okay, so meaning to say it would cost us 25 pesos to purchase one foreign currency. Pwede natin siya i-convert to an indirect exchange rate. So, to convert that, diba? So, diba, the formula is one foreign currency over Philippine peso equivalent value. That's actually 1 divide 25. So, therefore, it's actually 0.04. So, 1 Philippine peso could be converted into 0.04 foreign currency. Okay, so if indirect exchange rate yung given, to convert that into or to translate that into Philippine peso, okay, so the number of foreign currency divide the indirect exchange rate. Okay, so diba? So kanina, pag direct exchange rate yung given to convert or to translate it into peso, you have to multiply the number of foreign currency times the direct exchange rate. Okay, pero pag given is indirect exchange rate, you need to divide the number of foreign currency by the indirect exchange rate. Okay, so we do have the same answer, no? That's actually 500,000. Okay. So, also, say for example, ito, pag 1 Philippine peso is equal to 0.20 foreign currency. So, this is an example of an indirect exchange rate. Okay? Since 1 Philippine peso could acquire 0.20 foreign currency. And also, assuming we do have still 20,000 foreign currency, to convert that into peso or translate it into peso, it's actually 20,000 divide the indirect exchange rate, which is 0.20. So you do have 100,000. Okay? But yung indirect exchange rate natin, pwede naman siya i-convert into direct exchange rate. Okay? So, it's actually 1 divide 0.20, no? So we do have 5 pesos. So, 1 foreign currency could be converted into 5 pesos. Okay, so since na-convert natin siya into direct exchange rate, now to convert or to translate that into peso, you simply multiply the number of foreign currency times the direct exchange rate, which is 5. It's actually 100,000. Okay, so it's actually the same with kanina, no? The pag-compute natin o pag-translate natin then into peso. Okay? So exchange rates, whether direct or indirect, um, is often to be increasing or decreasing, no? Or nag-increase siya or nag-increase. So, itong first example natin, so, as you've noticed, yung the direct exchange rate is decreasing, while the indirect rate is increasing. Okay, so, this is an example of strengthening of the Philippine peso. So, nag-strengthen yung Philippine peso, pero nag-weaken yung foreign currency. Okay? So, nag-strengthen yung Philippine peso. It's because we do have lesser peso, no, to acquire foreign currency. So, we'll pay lesser peso to acquire foreign currency, no. And companies who import goods from foreign countries wants a strong peso. Why? It's because lesser yung mababayaran niya, 'di ba? However, a strong Philippine peso is not good for companies who want to sell their goods abroad. Of course, that means lesser profit. Kasi lesser would be your sales, diba? Or yung makollect mo. Mas lesser yung makollect mo. Okay? So, the second example naman, this is an example, no? So, you've noticed, nag-increase yung their exchange rate and nag-decrease yung indirect uh, indirect exchange rate. Okay? So, in this case, it's an example of nag-weaken yung Philippine peso. Okay? Since, or nag-weaken yung Philippine peso niya, nag-strengthen yung foreign currency. Okay? So, kasi, di ba, it would cost higher, no? It would cost us more pesos, no, to acquire one foreign currency. Diba? So companies who export goods from the Philippines or the wants a weak Philippine peso. Okay, of course, para yung makollect mas malaki yung collection kasi, 'di ba? Kasi nag-increase man yung direct exchange rate. However, a weak Philippine peso is not good for companies importing goods from abroad kasi it would of course, they would have more pesos na mabayaran in the settlement. Okay? So, we do have different rates, no? Different rates used in foreign currency transactions. So, exchange rates are quoted, no? Maybe quoted either spot rate or future rate. So, yung future rate, the other term niya is forward rate. So, yung spot rate is yung rate today and applicable today. Or it's actually the rate for the immediate delivery of currencies, or exchange. So, it is the rate in which currencies can be exchanged today. So, well, yung future rate naman, no, is actually a rate today applicable in the future. Or, it is the rate at which currencies, no, can be exchanged at some future date. Okay? Pero, in foreign currency transactions, no, yung unhedged foreign currency transactions, the only relevant rate is actually the spot rate. Pero, yung spot rate in the transaction date is actually the historical rate. And then the spot rate in the balance sheet date is actually the closing rate. And the spot rate in the settlement date is actually the actual rate. So these three dates, actually the transaction date, the balance sheet date, and the settlement date, are the three important dates to consider in foreign exchange transactions. Okay, so first we do have the transaction date. So this is actually the date when the purchase or sale of goods or services takes place. No? So this is the transaction date. So yung rate na gagamitin natin is actually the spot rate or the historical rate or yung spot rate on the transaction date, diba? So in this date, no, it is a date where the entity, no, records the purchase or sale transaction. Okay, so of course at the spot rate, no, or the Philippine peso equivalent value using the direct exchange rate on this date. Okay. So we also have the balance sheet date. Okay, so sa balance sheet date, we're still using spot rate, pero yung term niya, so ang gamitin is the closing spot rate. So, if financial statements are prepared before the foreign currency payable or receivables are settled, no, so their accounts must be adjusted. Okay, meaning to say the receivables and payables must be adjusted to its Philippine peso equivalent values as of the balance sheet date using the current rate on the balance sheet date, or actually the closing date. Okay, so since nag-change tayo ng value, so nag-change yung value ng yung exchange rate from the transaction date to the balance sheet date, of course, will account for the forex exchange gain or loss between the difference between the historical spot rate and the closing spot rate, no? Yan. So next would be the settlement date, diba? So it is the date when payment or receipt shall be made and the forex gain or loss are computed. Okay, so yung rate na gamitin natin is actually the spot rate, still the spot rate, pero yung is actually the actual spot rate. Okay, so in the settlement date, so first we have to adjust the foreign currency payable or receivable for any changes in the exchange rate between the balance sheet date and then balance sheet date and then the settlement date. So, or pwede rin transaction date and the settlement dates. Okay, so items to consider the treatments of foreign exchange gain or loss. Okay, so we do have monetary items and non-monetary items, diba? So yung monetary items, that's yung accounts, no? Or monetary assets or liabilities, no? Or units of currency held and assets and liabilities to be received or paid in fixed determinable number of foreign currency. Okay, so meaning to say, yung monetary items, no, or yung accounts na may right ka, no, to receive cash or obligation to receive, to pay cash. It's actually the monetary items. So yung non-monetary items naman are referred to the accounts, no, of which the peso amount of which they are presented in the financial statements differ from what they are actually realized or represents. Or basically, pag hindi siya monetary, that's actually a non-monetary item. It's actually yung accounts ng walang right to receive cash or obligation to pay in cash. Okay, so example ng non-monetary items natin are equipment, inventory, building, no? Or investments in equity securities. Okay, so subsequent to transaction date or balance sheet date, okay? Kasi at transaction date, whether monetary and non-monetary, who are using historical rates. Yung historical rate kasi ang gamit natin, no, initially in recording the accounts, whether monetary or non-monetary. But subsequent to that, the monetary items or non-monetary items may be adjusted. So at balance sheet date, diba? So we adjust receivables and payables. So a difference between the receivables and payables at the balance sheet date and transaction date is accounted for the foreign exchange gain or loss and should be presented in profit and loss. Okay. However, some monetary items, no, are not adjusted but subsequent to the transaction date. No. However, if it's investment in equity securities wherein we are to adjust it into its fair value, okay, the difference there, the foreign exchange gain or loss shall be presented in the other comprehensive income. Okay, so in an unhedged import and export transactions, no, so the only relevant exchange rate would be the spot rate as of the date of transaction, balance sheet date, and the date of settlement. So spot rates are classified either buying spot or selling spot, or bid rates or offer rates. No, so if it's an exporting transaction, no, so or if the domestic entity exports, so the buying rate is used. No, since di ba pag mag-export tayo, we are the seller, the foreign entity or the foreign company is the buyer. No, and since this would be the price that the foreign buyer would pay for the goods, no, so we'll use buying rate. Diba? Okay, so if the Philippine entity exports or imports rather, if the domestic entity imports, of course the Philippine entity is the buyer and the foreign entity is seller. And then of course, it is to be settled in their currency. No, the selling spot rate is used kasi nga they are the seller. Okay. We'll use the selling spot or the offer rate. Okay? So, 'di ba? Yung direct exchange rates is naga-increase siya and naga-decrease, no? Subsequent to the transaction date. So, the domestic entity recognizes foreign exchange gain or losses, no, as the spot rates changes during the aforementioned dates. So, between the dates, diba, the transaction date, um, balance sheet date, and then the settlement date. No? So, if it's an exporting transaction, no, so of course the exposed account is receivable. Okay? So, if mag-increase yung direct exchange rate, so mag-increase din yung receivable. And then, we do have transaction gain. So, increase in assets, increases in equity, di ba? So, it will be a gain. So, ang effect niya is gain. Okay? So, if it's an importing transaction, di ba? So, yung exposed account, yung exposed to exchange rate risk is actually yung payable, di ba? Then, kung mag-increase yung direct exchange rate or direct spot rate, mag-increase din yung payable. So, pag mag-increase yung payable, of course, mag-decrease yung equity, di ba? So, it will be a loss. Increase in liability would be a loss. Okay? So, if mag-decrease naman yung direct spot rate, no, mag-decrease yung direct spot rate. So, if it's an exporting transaction, so, of course, mag-decrease yung receivable, no? Then mag-decrease yung asset. So that's and then we do have a transaction loss for that. Okay. Also, if it's an importing transaction, okay, yung exposed account natin is payable, diba? So mag-decrease din siya. So pag mag-decrease yung payable, of course, may transaction gain, no? Na i-record si domestic entity. Yan. So, of course, a foreign entity does not record any gain or loss since the transaction is denominated in their currency. So, mag-record lang ng gain or loss is domestic currency. It's because, di ba, the settlement is on a foreign currency. So, exposed tayo with the foreign currency exchange rate risk. Also, yung freight terms din is very relevant, no? Especially in determining the transaction date. So, whether we import or export, so relevant yung freight terms, no? So, say for example, suppose the domestic company exports goods, no? So, if the term is FOB shipping point, no? So, mag-record ka na ng sale on the date it was shipped, 'Diba? So normally, mag-differ man yung date it was shipped and the date when the goods reach the destination, 'diba? So in FOB shipping point kasi, 'di ba? Yung legal title, uh, mapass na siya on the date it was shipped. Okay, so therefore, also for the seller's point of view, no, if it's in exporting transaction, so record niya yung sale um, on the date it was shipped. Therefore, yung transaction date natin is the date it was shipped. However, if it's in the freight term is FOB destination, so mag-change yung legal title on the date when the good reached the destination. So also that's the time where the seller records the sale transaction. Okay. Well, same then with importing transaction. So the domestic entity will record the purchases, no, on the date it was shipped, and it will record kung FOB destination naman, it will record purchases, no, on the date when the goods reach the destination. No? So, yun nga, relevant din yung freight terms in determining the transaction date. Okay, so in our next video, we shall be discussing some sample problems or illustration on how do we record foreign currency transactions. Okay, so thank you.